Okay, yeah, we're going to go over problem 410 from, and this is a similar problem um, in the 15th edition as it is the 16th edition. This happens to be the 16th edition. The 15th edition has a different town name. This is the City of Hinton. City of Hinton General Fund had the following post-closing trial balance as of April 30th, 2010 of its fiscal year, and it gives you the various balances here. And the first entry here is going to show you the various, the first entry listed here is to actually record the budget for the current year. Again, here's our opening balances for these various accounts. Those will come into play a little later in the module here. So, first, let's record our budget. So, first thing, budgets, as you know from previous modules, are going to be about 3 entries long. So, let's make our problem number 4A1 down through there. And the journal for budgets, as you know, for this module, we only have a selection of 2 journals from some data validation that I have set up for this spreadsheet. If any of you would like to use this spreadsheet for your own working through these problems, I can certainly give you a copy. Just request it. So let's start here. We're going out of the general fund, all right? Since we're recording a budget. Remember, the government-wide journal, which is your other option on this checkbox, GW, you don't record a budget there. Anything that has to do with budget is in the general fund only. So here we have estimated revenues totaling $3.14 million. So we know this is going to be estimated revenues. And our debit here, and again, we're debiting. All right. Appropriations. Appropriations are credited when you are adding them, so we're doing 3.1 million according to the problem. And so our difference here and our spreadsheet here that I have set up kind of helps you out with that. Our difference is 40,000, and that is going to be a credit to budgetary fund balance. I could look those up just here, but I know these accounts and exactly how they're listed there. So 4123, all right. So got our problem check figure out here again on this spreadsheet. We're just doing a sum if that is summing this table column, or it's summing the breakdown of the sum if formula if you've never used it. Is first you're identifying the range that you want to compare a value to. That's this entire column, the problem. The value you want to compare the range to, which is this problem number on this line only, and the amount. And so when you use Excel tables, it's automatically going to use the same formula all the way down. It's a very useful tool to use tables if you don't already. If you don't already know how. So that's how I'm able to do this little check figure here. And this will also do an overall check figure based on the journal, the general journal here. So if I mix in some entries, which I will do with government-wide, it will ignore those and only compare the journal. And actually that is messed up there, so I can show you how. This is looking at the problem also. So I can show you how to do this. Sum if, the journal. Let's see, there's the range. And instead of that, the value we want to compare that range to is right here, just that row. And then the amount that we want to add up is this column, which is basically taking your debit and subtracting your credit to give you kind of just a single column value. Okay. So right now everything's in balance. So let's go to the second, right? The city council authorized temporary borrowing of $300,000 in the form of 120-day tax anticipation note The note was obtained from a local bank at a discount of 6% per annum per year, okay, for 12 months. Okay, so on the number 2, you have the city council authorize this borrowing, and so you've got the, first of all, let's get this out of the way, 4A, so that our check figure will work. Okay. What's going entry here is going to be to cash because we have issued debt, and we've got the discount in there, which is going to throw off our amount that we're going to be able to actually collect in cash. Okay, so let's do this first and get our general fund entries ready. And here, all right, so the first thing we know we're going to debit is cash. So let's go ahead and put that placeholder there. All right, now the next thing it says, it's telling you that you're going to debit the expenditures for discount. So let's go ahead and put our expenditures line here. All right, and on our last line, we know we're going to, and this is the first line that we'll fill out here, as we'll put in this tax anticipation notes payable. And basically, banks are willing to give governments a loan, almost like an advance on the taxes that they know they're going to receive later in the year. And so here you're dealing with a 120-day note. So we're going to use that to figure up our discount there. So 300,000, we know that's going to be the face value of the note. But the amount we're actually going to collect is going to be reduced by this discount, okay? And it says that the discount is 6%, but that's per annum. So that's an annual rate. So what we're going to do here is take the 300,000. Let's type it out nice and neat here. Face value of note, 300,000, and we've got the all right. Now we've got the rate of 6% per year. So, so what we're going to do here is calculate what this discount is going to be. So it's going to be the portion of the year, 120 days over 360. So we're talking about a third of the year. So equals that times the rate times face value is 6,000. So that's going to be our debit to expenditures, which means that our cash balance, our cash proceeds from the transaction are only $294. Okay, and you see we've got it all in balance. Now this one is going to require a entry to the government-wide journal also. Okay, so let's copy this down a couple more times, and instead do file government-wide journal. You can see I've got the conditional formatting here to help differentiate entries that are made to the general fund versus the government-wide journal. So everything's going to look the same here, except for that line, expenses. It's going to hit some individual expenses instead of instead of expenditures. And let's see again, if you didn't see a previous narrated problems, I tried to use the same account names with a few exceptions. Try to see if there's a better one here, a more specific one. I don't see one, but we'll just use what we're given here. So a more general expenses account. Okay, so 294, everything's the same as I just said, and 300,000 x 300,000. See what happened there when I just did 3,000? It's giving me a check figure for both the problem check figure and the journal check figure. So That's the function of those two columns. All right. So there we go. There's our entry to the government-wide. Again, this is kind of showing you this dual entry process that governments have to undertake here. Alrighty, let's go on to number 3. So what we have here is that there was a property tax levy for fiscal year 2011, and the net assessed valuation of taxable property was $43 million, and the tax rate this jurisdiction is $5 per $100. Okay, so basically that's just saying it's 5%. All right. So if we know that's our rate, let me insert another line here to kind of space this out a little bit from our previous problem. So 43 million times 5% is going to be $2,150,000. All right. So we know that is going to be our entry for when we see the property tax levy. That should be our clue that they're talking about recording the receivable. Okay. So let's go ahead and copy this down a few times. So if they're talking about the receivable, then our fund is going to be, first we're going to record it in general fund. And I think this will be a 3-line entry here because you're talking about both the receivable, the tax receivable, as well as an uncollectible portion, as well as always when you're recording this receivable, you're going to record revenue. Okay. So we've got first thing is taxes receivable. Thought I had that memorized about how it was exactly spelled. Let's see, sorry. Tax receivable current, okay? So that's going to be all right, and so basically we're recording as the debit the full amount here of the levy, okay? Because we're going to adjust for the uncollectible on the next part of the entry. So the full amount is the debit. And now this next line is going to be where you record estimated uncollectible current taxes. You see there's different lines here. There's different accounts for estimated uncollectible delinquent taxes, and also and you will see that up here in the prior year balances, because that's pretty much all you should have at the end of the year on these problems you're going to do. Is you're not going to have any current taxes receivable current, because at the end of the year, part of the process is to reclassify all those to the delinquent accounts, both the taxes receivable delinquent and the estimated uncollectible delinquent. And there'll also be an interest and penalties receivable, as well as uncollectible interest and penalties. You can see that estimated portion of that balance is pretty high there, which makes sense. If somebody's already delinquent, then their interest and penalties are probably not going to be too, the collection rate's probably not going to be too great on that. So anyway, we've got it here, tax receivable current for that amount, and let's do our estimated, estimated uncollectible current taxes, okay? And our rate, the problem says, was that 4% of the levy would be uncollectible. All right, so here's our taxes receivable amount, and here's our uncollectible amount. Wrong column there. And they said it's 4%. So let's do equals 0.04 times that. 86,000 is going to be the credit. Okay, the credit to estimated uncollectible taxes. And then the revenues account is basically going to be the difference. And you can get that difference out here using your your check figure column if you're using this workbook. Okay, so basically there's not going to be any difference in the government-wide side of the entry either. Okay, So you're going to go here and let's copy these two down, because the only difference is going to be the the title of the account. And so real property taxes, here we go. General revenues, real property taxes. That's going to be, again, you're kind of getting a little more specific on the government-wide side. I'm contemplating whether or not to get rid of the whole idea of a control account for the general fund on our both in the Smith-Bell application as well as the the overall tests and things like that. Is it just adds unnecessary complexity to things. It does make some things a little cleaner. All right, but so anyway, the entry is going to look exactly the same except for that one account type. Okay, so there you go. All right. So 4A4 is going to be our next problem. And this should be a clue to you. What do you see here? What's kind of the magic word you see here? Purchase orders and contracts were issued to vendors and others in the amount of $2,059,000. So this one should clue you in. You see the word purchase orders? You are talking about encumbrances, all right? And when you're talking about encumbrances, you're talking about placeholders in the budget, because these are budgetary accounts, encumbrances are. So you are, as we discussed in the previous module, you are debiting encumbrances, you're crediting encumbrances outstanding for the same amount, because again, you've only issued the purchase orders, awarded contracts. You have not yet received any invoices for those. All right, number 5 here, it's saying that the Board of Review discovered some new property, and it has a total taxable value of $500,000. So let's go right here. And let's just copy and paste this down, because we just used that, and say instead we're talking about a $500,000 assessment, and let's shrink that up so it doesn't look bigger. All right. So, but in this case, they're saying you don't have to adjust the uncollectible current taxes amount. Okay. So, since everything is going to look similar on this problem, why don't we come up here? Again, one of the handy things if you're doing work in Excel, and let's just copy and paste these amounts down so that we'll have all of our accounts ready to go. And the only difference being we're not going to need the uncollectible amount. So let's just delete this entire row and hope it doesn't throw things off too badly. Nope. This one's easy. Okay? Talking about $500,000 assessment, a $500,000 value times the 5% assessment rate gives you your $25,000 for taxes receivable. Okay, this is going to be an additional amount. Next, we have number 6, which is saying these are our collections. All right. So we are collecting the following amounts: $1.961 million of current taxes, $383,270 of delinquent taxes, and $20,570 of interest and penalties were collected. So let's go ahead and prepare our entry here, and looks like we've got 3 items in the actual problem, 1, 2, 3. So we're going to need a credit for each of those and 1 debit to cash. Let's do a 4-line entry here and do 4A6. Okay. So first thing we know, we're going to debit cash, but let's hold off on that entry for the moment, because that's just going to be the sum of our credits, because we're collecting here. So we're collecting, so we're going to reduce these receivables, meaning that you're going to credit them, and we're going to increase an asset, cash, which means you will debit it. So let's do first this taxes receivable amount, which says it was, again, let me scroll up so it's right next to the problem. All right. The tax receivable amount is 1961123, and delinquent current taxes, which again we haven't made an entry to yet, but we saw where the city had a beginning balance for the delinquent delinquent taxes account, and so that was $383,270 worth of that, and $2570 of interest and penalties. Okay, and that's going to be a $2570 worth of that, and so the sum of those, got a big number over here, it's going to be 2364840. All right, that's going to be our debit cash, and the government-wide entry in this case is going to look exactly the same, with the accounts even being the same, the account names even being the same. So let's just do it. Let's just copy and paper so it will sink in a little more that those are. It is going to be an identical looking entry. You're going to run into that a lot, by the way, in the Smithville application, of entries looking very similar. Okay. Because we're talking about additional interest and penalties on delinquent taxes were accrued in the amount of $38,430, and 30% of that, again a high number, were estimated to be uncollectible. So here we're going to have, let's go ahead and put general fund, and then this is going to be a transaction that's recorded in both, though it's going to look very similar. So first, we're saying that we're accruing the additional interest and penalties. So we are, that should be your keyword, that you're either recording a receivable or a payable. So here's our receivable right here in the problem above. Let's just use that, put here, and we know our, widen that out a little bit so you can see the full account name. All right, and we were told that that amount is $38,430, and that we have an estimated uncollectible on that amount. Okay, so estimated uncollectible interest and penalties. We were told that the amount is 30%. So 38,430 equals 0.3 times that amount. Equals that times 0.3 gives us 11,529. 11,529 is our estimated uncollectible, and so the plug here is going to be the revenues. And there's a more detailed account name here, but we'll just use revenues for now. So 26,901 is our difference. Okay, and the entry is going to look identical to in the government-wide journal, particularly these two accounts. But on this one, there's probably a more specific interest and penalties, general revenues. Here we go. General revenues, interest and penalties on taxes. Okay, so that's 4A7. Now on 4A8, this one, the keyword here that you should look for is budgeted. There's change in state law. The city was notified it will receive $80,000 less in intergovernmental revenues than was budgeted. sure this happens to local municipalities all the time. Keyword there is budgeted, so we're dealing with budgets on this entry, so that means there's not going to be any government-wide entry on this one. And so we're talking about 80,000 less in estimated revenues, okay? So that means whereas we credited our budgetary fund balance earlier because we had more estimated revenues than we had appropriations, we need to bring that budgetary fund balance back down by debiting it here because we're talking about less estimated revenue than we originally had. So we're adjusting that budget. Budgetary fund balance, and we're crediting estimated revenues because we are reducing them, okay, because of this change in the tax law. All right. So for number 9, you have that the total payroll, it's giving you the total payroll for the year. And let's record all this for now, this first part in the, you know what, let me separate these two by doing this. Government line, and no entry required. Okay. That was 480. So, all right, so 489. And all right. So we've got here the payroll. So the government is paying its employees, and so we know that the total payroll is $819,490, and it just lists the various withholdings here. Okay. So the amount. But we know the total amount of the expense is going to be expenditure is going to be $819,490. So we can go ahead and put that amount up here as $819,490 because the rest of these credits are going to be to the various liability accounts. Okay. So this first one, let's do the easy one first. The state taxes. There's only one of these that's going to be for the state taxes. So let's put that here. And there should be an account called due to state government. Yep, right there. Okay. Now the Fed, there's going to be another entry here, and you can segregate them if you want. But there is another entry here that is going to be the combination of the two numbers. The due to the federal government is going to be the combination of the employee's FICA, that's your Social Security and Medicare taxes, the employee share of it, and then 103,710 is what they had withheld in federal income tax. Okay, so that's going to be the sum of those two, which is 166,400. That's the total of those two. And so what's left is actually going to go out the door in cash to the employees. These two right here will go out the door eventually when we remit the amounts withheld to the federal government. But for now, those are just recording the liabilities. So the cash amount that we're sending out the door in actual paychecks to the employees is going to be the difference in all those, 618,690. Okay. For the government-wide journal, everything is going to look exactly the same, except you are there's a different expenditures title here. It would just be expenses. Let's see if there's a. Oh yeah, that's right. All right. So one thing you'll notice in the Smithville thing is it's going to, when you drill down to the expenses, it's going to list it by the functional area, not by the functional expense category, which would be, wages. You're going to be splitting those wages among the different areas of the government. Okay, we're just going to use expenses here because it doesn't give us a breakdown of which area of the government these expenses apply to. So we're just going to use expenses, general expenses, but that's just something to remember for your Smithfield. It's not going to say expenses, wages, expenses this, or expenses utilities, or expenses depreciation. You're going to be recording the expenses by the area of the government that the expense applies to. Okay, well, let's go to 4A10 here. This one should be relatively straightforward given what we just did. You are talking about just having expenditures again. 10 says the employer's FICA tax liability, so the employer share of all this was recorded for 62,690, and except for a couple of years in our history, those two amounts have always matched: the employer's amount and the employee's amount. Okay. An economist will tell you that even the employer share is coming out of the employee's pocket, because the employer doesn't care when he's paying. He sees the whole thing as a budget for personnel costs, for wages. The entire amount, this 819,490 plus his share his or her share of the taxes, the FICA taxes. So some economists have argued, hey, if you got rid of the employer's FICA share is actually a further tax on the employee, but that's for another day. So you've got here, we're going to go with expenditures again. First, let's get our line items down here. You're going to go expenditures for 62,690, and same thing. This is going to be due to federal government. Okay, and on the government-wide side, everything again is going to be the same, except for you know, you're going to be choosing a category besides a specific area of the government the expense will apply to. Okay, but for now we're just going to do expenses. Okay. Okay, so 4A11, sorry there. 4A11, it's pretty easy. It should seem familiar to you. You are just collecting revenues from sources other than taxes. Okay. So when you're collecting revenue, you are increasing. And in this case, you're not. In this case, the problem doesn't say this, but the solution implies that these are revenues for which you have not already accrued the revenue. You haven't already recorded and I guess the giveaway there is because it's talking about from sources other than taxes. Okay, so we're collecting, so that means we're going to be debiting cash for 946,700, and on the revenues line, 946,700. Okay. Government-wide journal is going to look the same, except again, in this case, let's see, in this case, you are going to be, it says general revenues, but let's see if there's a better account here for general revenues, miscellaneous, since it said it's non-tax. Okay, not tax related. Okay, so that was number 10. Cool thing about tables, as I mentioned earlier, when you want to get ready to insert a new row, when you do that, any column that has a column formula automatically pulls it down to the next row. So let's go ahead and just add some more here to give ourselves some room for the next problem. Okay. All right, number 12 says that amounts due to the federal government as of April 30th, 2011, and the amounts due for FICA taxes, state, federal withholding taxes during the year were vouchered. Okay, so the first thing is, it's obvious from the problem that we're about to clear out these due to federal government, due to state government accounts. So let's go up here, since those are going to be debits again, because you are reducing those liabilities. Let's go up there and grab those two accounts, and then so we need to come up with our amounts here. So the state government, I think there was only one entry above, and let's do this. Let's show you another cool feature of tables. We can filter this by those accounts, and we can see what our our totals there are. So it looks like, for again, general fund, we're only talking right now, that's general fund. We've only got one entry for due to state government. So let's do 34,400 as one of those debits. And due to federal government, we have, let's see here, are these the three? Do we have a beginning balance? Oh, sorry. Do we have a beginning balance there? 229. Let's see if we have a beginning balance. Yes, we do. 59,490. So you have to take into account when it says all amounts in the due to federal government or due to state government accounts, blah, blah, blah. You got to be sure you're going back and checking your beginning balances too. Okay? So I think it's going to be that amount of the 59,490 plus that amount, holding down our control key to get all three of those. Our total, as you can see down here, hopefully, is $288,580. So that's going to be our debit for due to federal government. Okay, so let's clear that back out and scroll back down. So there's our two debits, and the problem says that they are vouchered for payment. So we are increasing another liability, basically sending this payment voucher to the payable department. Uh-oh, deny. Looks like I've still got this filter up here, sorry. The general fund, let's clear that filter so that we're operating here on the very next row. Alright, so we have another general fund entry here where we are going to credit vouchers payable. Okay, and the sum of that one is $322,980. Okay, and that's our entry for the general. Our entry for the government-wide journal. This is usually the case for these kind of, paying a bill, recording a bill type problems. As long as you're not talking about purchase orders, which when you get into encumbrances. But the problem is the entry looks exactly the same there. And as you can see, it appears my my conditional formatting did not copy down as the rest of the tables did, but those are government-wide entries there. Maybe I can copy and paste that formatting so that it is the same. There we go. All right. Let's see. All right. These two kind of keywords here on number 13 should clue you in a little bit. First of all, purchase orders. So we're dealing with encumbrances. It is saying purchase orders and contracts encumbered in the amount of $19,88040, $1,988,040 were filled at a net cost of $1,987,570, and it was voucher. So when it's talking about something previously encumbered that was filled, you are taking off the encumbrance amount that it gives you in the problem, because that's no longer an estimate, so we don't need that placeholder for encumbrances anymore. So you're going to take that off, and you take it off by debiting this time encumbrances, outstanding, and you are going to credit encumbrances because you did the opposite when you first recorded them. And you are going to, and the amount that you are talking about here of what you're taking out of the encumbrance is this, the previously encumbered amount that the problem gives, which is 1988040, 1988040. Okay? That reverses your encumbrance that you originally had recorded. Now you have to record the actual expenditure of $1,987,570. Okay? So we need 2 more lines here for that. And we're going to debit expenditures. And we're going to credit vouchers payable. Okay? For 1987570. Again, because these are the actual bills that came in to be paid, that we previously had recorded an estimate or an encumbrance for in order to put that placeholder in the budget. All right, and we have one more step here. I'm tired of doing this right here. And just go ahead and insert a whole bunch of lines so we don't have to keep going back and forth. Okay. Let me also copy and paste this formatting down. Okay. So we got one more step here, and that is to record the portion of this entry that applies in the government-wide journal. And that portion is the actual recording of expenses. Expenses, because remember, encumbrances are budgetary related, and so they have no impact on government-wide statements. So the only difference is the name of the account there. And so let's go with 1987570, again the actual amount. Okay. And your vouchers payable for the exact same amount. So this next problem, 14, is basically paying bills, and it sounds like they're paying them early because they're getting a discount. Vouchers payable totaling $2,301,660 were paid after deducting credit for purchases discount. So you're going to credit expenditures here because in your original recording of vouchers payable, either in the problems that we've done or if the vouchers payable applied to the kind of the prior year balance, which they probably wouldn't be giving you a discount for if you're paying them that late. But you're going to credit expenditures because you've already recorded the expenditure up there, and you've already recorded this vouchers payable for this full amount, presumably somewhere along the way. And so I don't think that amount is exactly what we recorded earlier, was it? Let's see. No, I don't think so. No. So it's a combination, but basically it's referring to this balance is referring to 2,301,660 worth of vouchers payable you've already recorded. Okay, and you're going to reduce your expenditures that are associated with with those vouchers payable by $8,030, and so your net amount here is going to be cash. For, again, looking at our check figure, 2293,630. And the government-wide entry is going to, again, look exactly the same, except you are talking about expenses. Oh, it's not letting me because I haven't fixed the journal yet. But data validation working well there. Now I can change it to expenses. Okay, for $8,030. Okay, the next problem, fairly easy. You remember original issue of the tax anticipation note earlier. So we're just paying it back off. And you noticed the tax anticipation note had that 6% discount, so we only received $294,000. So that $6,000 difference, it mentioned discount in the problem. That's essentially our interest expense. Okay. And let's do one more, because this will be a two-line entry in both the government-wide journal, and the general fund. Okay. So we're going to debit our tax anticipation note payable for $300,000, and we're going to credit cash, because that's what's going out the door, and we're reducing an asset there. Let's see, and the government-wide journal is going to look exactly the same account numbers and everything. Okay. All right, this next one. 16 is a little tricky, and you're going to have to do this in your Smithville application. So it's like I didn't insert near enough lines here, so let me insert a bunch more, okay, and format them correctly so everything matches up. All right, so here we go. 4A16. We are going to reclassify all the current year's property taxes as delinquent, okay? And so if the problem helps you out a little bit there, the balances of the current tax receivables and related uncollectibles are transferred to the delinquent accounts. All right, so it's talking about balances. So again, when you hear the word balances, or the entire balance of something had something done to it, then you're going to need to take a look at your you're going to need to at least check out to see if your beginning balance, which is at the top of this problem, had a balance for that account. And as I mentioned earlier, all your accounts were reclassified as delinquent. So there is no current balance for taxes. There is no beginning balance for taxes receivable current, because they all became delinquent as of the end of the prior year. So in order to get that taxes receivable balance, we're just going to need to take a look at our prior entries. Okay. So let's filter this list by taxes receivable current, and knock out this part of the problem first. And again, filter it for just the general fund. All right. So you can see here that we have a debit to taxes receivable when we levied the taxes. We had that additional levy that came in on that $500,000 home or property. And then you had collections of $1.961,000. Okay? So what we're dealing with here is a current balance of taxes receivable of $214,000. All right? There's our current balance, $214,000. So our next entry here, our first part of our entry, first part of our entry is going to be to debit taxes receivable delinquent for that $214,000, because remember, we're reclassifying it out of current to delinquent. Okay. So our first part of our entry is $214, the debit, and the second part is going to be the credit to taxes receivable current. Okay. If you want a little tip on the Smithville application, one of the most commonly missed entries that I've noticed in a few years of teaching this course is that students mess up this entry. And so I will get a submission from a group, and it will have a huge credit balance for taxes receivable delinquent, or a huge a debit balance for uncollectibles, which again should be a credit balance, or vice versa. And so just be careful with this entry, and make sure that for this purpose, when you're done with, when you submit your module, that your trial balance at the end of the day only has a taxes receivable delinquent balance. Because for this purpose, they're treating anything that is still owed out there at the end of the year as being a delinquent tax bill. Okay. So we've reclassified the current amount to delinquent by crediting current and debiting delinquent taxes receivable. Now we have to do the same thing with the existing uncollectible balance. Okay, so we're going to go up here and we're going to take a look at the estimated uncollectible taxes. Estimated uncollectible. It looks like in the general fund we only have one entry for $86,000. And so again, we are reclassifying from current to delinquent for both of these account types. Okay, so estimated, let's just go up here and find the exact wording. Estimated uncollectible delinquent taxes is your debit because you're increasing that account. And the account that you're closing out is the one that we used previously, the estimated uncollectible current taxes. All right. So those two things are going to zero out the current balances there and turn everything delinquent. And the entry for government-wide journal will look exactly the same. Okay, and so I think we're going to stop there because the next problem that has to do with inventory of supplies is, I don't think, very useful. You're not going to be tested on it. If you do notice a test question on it, please let me know and remind me of this. Just kind of down in the weeds, and I don't think very useful for your understanding of governmental accounting. So that'll be it for problem 4A10.